All right, good afternoon. How's everybody doing? I just want to make sure everything is on. Everything's good to go. I hope you guys are doing great tonight. Hope you guys are having a great day. I hope you guys had a great day. I hope you guys had a great night. Okay, so I'll be able to get this stuff figured out. Not figured out, but I'm going to probably have it switched out tomorrow so you don't have to see all this stuff from the background. It's a work in progress, just like all of us are. We're all a work in progress. And thank you guys so much for joining me tonight. I hope you guys find this information valuable. If you have any questions, tickers, anything you'd like to know about a trade or what I think about a trade, post them in the chat. We have members that will also, let you know what they think. We're a team here. All right, we're a team. So that is my goal, guys, is to provide a place that traders can go to, all right, and can get some valuable information and insight during the day. You can trade with us while you're at work, okay? You can trade with us, on the desk, It would be nice if you guys could like, share, and subscribe. Again, if you find this information valuable, thank you guys so much for joining us tonight again. Big day, guys, big day. What we're going to get into tonight is what am I expecting? What am I looking for? All right. What are the things that I'm going to want to hear? What am I expecting from the market? What's up, my guy? I hope you're doing well, Collins. Like I said, a lot of this stuff was priced in, but we're going to get into it. We got some tickers we're going to go over. Like GME had a pretty big day. We had them on the watch list. I want to mention TLT and TNX, like the 10-year, and then you have the 20-year Treasury. I'm going to get into them. What we're going to do is we're going to have a game plan. We're going to come up with a game plan on here, and then I'm going to go through some tickers. So if you guys have any random tickers you want to toss out, I'm going to go through. I'm going to chart them, kind of get some things ready. You may have news with just involving a random stock in the morning, and that's fine. We don't know what to expect tomorrow, but we did have some small caps wake up today, like AI. AI went on a pretty big run. Dave and Buster's. So let's go take it to the FedWatch tool again. Thank you guys for joining me tonight. Like, share, and subscribe if you could, if you find this information valuable. I want you guys to know that we are live Monday through Friday, 7:30 a.m. to 4 p.m. Just after the bell. We cover earnings. We'd like to dive into lessons and stuff like that during lunchtime. If you don't know, my family has been going through a lot with the past week, 2 weeks. It's been a lot. So kind of getting on the backside of that. We do have some other things that are coming up. So just spend the time with your loved ones while you can. I'm just going to leave it at that, guys. Stay healthy, get your sleep, get your exercise. Stay positive. All right. When we come on these streams, this is what we're trying to do. We're going to keep positive, and we're just trying to get to where we want to be in life, guys. That's all it is. That's all it is. This is just one piece to the puzzle. What are we going to get into first? What are we going to get into first? Well, first we need to know what kind of data we got. I think we get PPI in the morning. Okay. I think we have PPI in the morning. You have GDP month over month for the British, wherever that is. So, kind of just, I don't know what GB stands for. Maybe I do. Maybe if I hear it, somebody types it in the chat or something, maybe I know what it is. But look, we have PPI in the morning. Now, PPI has been ahead of CPI as far as coming down. Be pretty crazy if we do get a negative handle on this, okay? The consensus is a negative, forecasting 0.1%. So, previously was a 0.2, all right? So, we're going to watch for the PPI. So, as long as this thing doesn't, come in crazy high for some awkward reason, it's probably not that big of a deal. We've gotten CPI. CPI is helping the Fed out with making the decision to pause. But there's more to it than just pausing, and that's what I want to get into. Again, I don't think, at least from what I have seen, and I'm not able to watch everything and like kind of get a sense for things, but I have not really heard anyone talk about this balance sheet reduction, and I'm wondering if we're going to get the answers to that tomorrow, because that's also a big deal. That's liquidity, and liquidity is so important. All right, so we have some oil and gas data coming out. You want to keep an eye on them if you like to trade your USO or your crude. So we have the interest rate decision tomorrow, guys. That comes out at 2 o'clock. Again, a lot of the data like CPI, PPI, and stuff like that, if you don't know, it comes out at 8:30 in the morning. You could get some housing data. I think usually the earliest is like 7:30. All right, sometimes they will have some data that's not too big of a deal. They will release it around 7:30. But that's randomly. And I mean, unless there's something specific to that sector, like housing or something, then it's not going to be that big. It's not going to move the markets, we'll say. All right. So we have the Fed interest rate decision comes out at 2 o'clock. Now, if you don't know, the Fed has also met. They met today. They will meet again tomorrow. All right, to discuss what they're going to do. So maybe they have not figured out what it is they're going to do. Now we do know we have. Let's refresh this. All right, so it's still pricing in a pause. All right, they think they're going to pause. So they're pricing in a pause. Again, we have the press conference at 2:30. The release of the interest rate comes out at 2. You're going to get the summary of economic projections at 2 o'clock as well. All right, that's going to give you GDP, unemployment. It's going to give you PCE, which is an inflation data, and then it's going to give you the rate hike decision. Okay, those 4 pieces of data are going to be in that. And what that is we get a dot plot per se. Not per se, but we get a dot plot, okay? And the 18 members dot where they think the interest rates are going to be in time. You'll have year end, you'll have 2024, 2025, and so on with the longer term, where they think with their math that the interest rates are going to be. They add in, CPI to GDP, or they'll minus like you have your ISM manufacturing, your ISM data. Like they'll use that in conjunction with, CPI or like there's all kinds of ways to do it. You could Google it. Maybe I'll come up with a video one day, and if you guys remind me, because a lot of this stuff comes down to like formulas and knowing how to, knowing what the formula is, like ISM minus unemployment or ISM minus GDP times unemployment, like just something crazy. Like it's not crazy, but there are formulas out there that help get them to where they can feel as though like it gives them a sense of where things are going to be in time. Okay, doesn't mean it's going to happen because there's uncertainty of anything can happen, so things can change. All right, as well as past data is not indicative of future performance or future data even. So thank you guys for joining again. I want you guys to know that we're live Monday through Friday, 7:30 a.m. to 4 p.m. Eastern Standard Time. Okay, so this is just pretty much the major of it. I don't need to go through all of these right now. We do have some other data also tomorrow, the interest rate decision for Europe. Okay, she has been pretty keen on, adding another 25. So if you don't know her name is Christine Lagarde, and she has been around and been the pretty much the Jerome Powell of Europe. Pretty much their Federal Reserve, for their central bank. She's been there since 2008. Okay, she still thinks that they need to raise rates. Okay, she's still in the in the bucket of raising rates. Okay, because usually you'll have, like, let's say it's like a bucket. You'll hear this term a lot. Okay, you'll get data, like good data, and you'll put it in a soft landing or a hard landing. You have two buckets, and a lot of traders, a lot of people in this space will do this. The whole question was coming into this: is the Fed going to have a soft landing or a hard landing? Okay, excuse me. A 9 print last year went into the hard landing. You just drop it in the bucket, drop a penny in the bucket for hard landing. October till now, inflation has come down around 3-4% month over month. Like the change, the rate of change, not like, if let's just say if December it was 5, and in January it came in at 4.1, and then February it came in at we'll say 3.5. Like, it's coming down, and at what rate, So you want to think about that. So that would be a soft landing, like inflation's coming down. So now you have two buckets: hard landing, soft landing. Anyway, we talked last night. So look, we also have retail sales. Okay, retail sales. We have, if you watch this stuff, and not just the United States, again, it's important because there's a trickling effect around the world. Okay, exporting, importing. You're going to see a contraction in other countries, and you're going to start to see it like ramp up, and then like it's going to start in other places, and you're going to be able to see it, like where it's who's dealing with what. Okay, again, like I say, you don't have to remember them all. Okay, but so we also have Japan interest rate decision. Okay, so there's a lot going on, and it's not just here. Now, I say that to you because the majority of the companies in the United States of America do business around the world. They don't just do business in the United States. So that's why it's important, okay? This is cost of capital. So when you have earnings, and this is all important because this ties back to the dollar, okay? Our dollar has been higher for the first time in I don't even know when. Maybe 2000s, I have no clue. I'll have to look it up though. So this comes into earnings, okay? Their foreign exchange rate. So if companies sell products in other companies, or if companies sell products in other countries, okay, and our dollar is worth more than theirs, okay, that means when they take the euro, we'll say euro, okay, or the yen, whatever, when they convert that back to US dollars, it's going to be less, okay? Because it takes less dollars. If their dollars are worth less than ours, it technically takes, that's less money that they get. Now, if the United States dollar is lower and theirs is higher, okay, our dollar, it takes more dollars in cents because it's lower. It would take more dollars to buy the same thing. So when their dollar is higher and then they convert back to US dollars because ours is lower, we're making it up for it. Like if you were to go on vacation right now in other countries, it's going to be more expensive. All right. That's a whole lesson. That's a whole nother lesson we can get into because it's very important. If you go over any earnings calls, foreign exchange rate is one of the big topics that, you haven't really heard about anymore. It was a big topic when the dollar was just skyrocketing. Okay. So that also, like, the main point to that is that it has an effect on earnings. Okay. On what they bring in every quarter when they convert that back to USD. All right. How does the screen look? Does the screen look good? Okay. Is my camera froze again? I think it is. You guys see that? I've been dealing with this all night, or not all night, but like yesterday and today I started dealing with it. So I'll just close it and just leave it there or something. I don't know why it's freezing up on me. I'll have to just unplug it and plug it back in. So anyway, let's get back to the show, guys. Again, like, share, and subscribe if you could, but more importantly, comment. Put in some tickers, some trade ideas that you guys like to go over. Again, I appreciate you guys for being here. Just gotta stay positive. I know a lot of people go through a lot of things. Everyone goes through things, but if you want to come on here, talk about it. We can all get through these things together. We're here to make some money, okay? And we're here to help each other out. All right? So Like, so the best thing that you can have on your side is another group of traders that are experienced, okay, that are experienced professionals, all right, that you can go to and say, hey, I'm thinking about this. What do you think about it? Like, what's your take on it? Okay, and we can say, all right, let's pull up the chart. Pull up the chart, and then there we go. Like, it's like, okay, well, this is what I think. You got resistance here. Is the juice worth the squeeze? Is the juice worth the squeeze? So I'm going to get into the charts now. I don't want to spend too much time on it, but sometimes it just takes as long as it takes. So before I forget, I am going to talk about the Fed. All right, I'm going to talk about the Fed. What am I expecting? What do I expect? Okay, I have honestly. So let's go back to 2022. Okay, let's go back to 2022. You had Jackson Hole. If you guys don't know what Jackson Hole is, they have the world pretty much. You want to know who runs the world? Jackson Hole every year. It's roughly around the springtime. Okay, they meet all the head bankers, corporate, all the big shots of the world. They meet in Jackson Hole, Wyoming, I think it is. Okay, so they discuss like economic policy. They discuss all kinds of things. They hang out, and they figure out what they can do. You know, Jackson Hole. Now, I forget where it was. I think it was here. I think this was Jackson Hole right here. Okay. And you had Powell. Well, or was it? Or was it here? I can't remember, guys. Excuse me. I'm sorry. I'd have to Google it and see when it was. Might have been here. I'm not too. Might have been up here, guys. Right here. I don't think it's June though. I think it's a little earlier than that. Anyway, it's not important. So every year they have this meeting, and next year you'll be able to hear. You'll know about it, especially if you're here with us, because it's important. Because all of them talk to the media, and then when they talk to the media, they influence the market. And I'm gonna tell you right now, I'm pretty sure it was right here. Look at this 2-day candle after Powell came out, and Powell held a meeting and was super hawkish. Talking about Paul Volcker, okay? Talking about pain, bringing pain. We need to see pain, okay? Inflation was rampant. We don't have that. You know what also they said? He also said that they do not want to do what they did in the 70s. What did they do in the 70s, okay? In the 70s, they raised interest rates. Inflation would start to come down. They would bring down interest rates. Inflation would ramp up. So there was this big just tug and pull with sticky inflation and whether the Fed had a hand in helping that or not, you won't know that, okay? Because every environment's different, okay? It could have been an environmental thing, whatever. If there was a war, the Iraq thing, like with oil, you don't know what is causing the root of the problem. And the Fed can help by spurring lending. Spur lending is growth. Okay, you have a lot of lending. You have a lot of new money out. You have it circling. There's a formula you can use that they don't use anymore, and I wish they would. It's called velocity. Velocity of money is how fast it is circulating in the economy. And I would say velocity now is probably slowed. But if you go out, at least where I'm at, there are so many people. There's just so much shit going on. Okay? It's busy. Like where I'm at, this money is just a flowing. Leaving one hand to the other quicker than you can blink. It's just a rotation of money. So the Fed said that they did not want to stop, pause, or start, pause, and do this back and forth and let inflation go. I think they've come to realize that all they needed to do was give it a little time with China opening up things, because you had everybody just not doing anything. Okay, the world was pretty much shut down in some places, okay? So you give these people checks, you bring interest rates down to zero, people are refinancing, they have money, so people aren't doing anything, and they also have jobs, the majority of them, but again, some places didn't, and it was needed. Okay, so you open up. Now all that money comes rushing in. Okay, it comes rushing in. You get the holidays. Excuse me. All right, we've seen car sales, like cars were ridiculous, and all it needed was a little time. They said it was transitory. Well, maybe it was a little bit transitory, okay, but prices did go up and they haven't came down, but the Fed don't give a lick about that. And it's kind of unfortunate for people that are on fixed income and retired and aren't allowed to work and are on fixed income. Okay, you guys need to think about that for when you get older. If something happens and you just get pushed to the side and inflation takes over like crazy. I know this event's going to help me remind me of that. All right, so I'm going to try and prepare myself for when that time comes. All right. So, excuse me. So, this Paul Volcker talk was all in here. We need pain. We need this and that. Now comes 2023. 2023 comes. Right here. I know his name. Again, he has the boots. Oh, man. Now the more that I think about it, I can't think of his name. Kashkari. Neil Kashkari is his name. All right, so Neil Kashkari came out right here. It was right here, this today. Now, I remember it. How do I remember it? Well, because you had the banks. You had the banks start to give up. Or it was right after Neil Kashkari. Because Neil Kashkari, yeah, right here, guys. So what happened here? Oh, come on. So what happened here was Neil Kashkari. Now this is why it's important to try your best to get on these when the Fed has like meetings, like whether it's at a college or a luncheon or something. It's important to try and listen to it live. It's a little different to take that information and like read it off of off CNBC or somewhere, okay? Because you're not getting the full experience. You're not getting the tone, in what manner are they saying these things. So, the manner in which they're saying and doing these things is important than just reading, I think we're done interest rates. Okay, so what happened? Where am I at here? 2021. So right here we had Neil Kashkari. So again, we had Paul Volcker back here all year. Paul Volcker this, Paul Volcker that. We need pain. This economy needs to go. We need to slow things down. So you had Paul Volcker right here on this 2-day candle. Okay? That was Neil Kashkari coming out saying, I think we're about done. I think the Fed's going to pause on these 2 green candles right here. Okay? Are you kidding? See, my mouse, I guess, it's just so easy to just click. So Neil Kashkari comes out and says, I think we're about done. I think the Fed's about done. And in the same token, you get other Fed members saying, I think 6%. I think 5.5%. I think 6%. We're not done. No. Neil Kashkari came out and told you, if you listen to it and got his demeanor, hinted at the fact that they were about done. And we are right here, probably about done. All right. Inflation is not continuing. They're probably going to keep rates up because they said that we're going to raise rates higher for longer. Okay. The thing is, what happens when shit hits the fan? You've seen them already step in with the banks, which is good. They didn't have to lower interest rates or anything. So Neil Kashkari comes out. The market rallies. 2-day rally to the upside. Bang. SVB. All right. SVB. Where was SVB? Right there. Right at the top of that. That was SVB. Then you get PacWest. Market takes it up. This is like PacWest, and they all come out, blah, 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 blah. We have rallied. All right, so we're rallying. What happened was that weekend the Fed put a backstop in it, and then the market's like, okay, well, we're going to trade to the upside until something happens. Until it doesn't work, then we'll price it in. So here we are today. Well, you also had Powell, I think, right around here, and you had Janet Yellen, you had Powell, right here with Ben Bernanke talking about, or it was like right here on a Friday or something. Maybe it was there on the breakout. They said Powell said that he was, he hinted at pausing. See, I'm looking at the camera when the camera's not even working, so I don't even know why. I knew I shouldn't have had it up. So, on that Ben Bernanke meeting, he said that they were talking about pause. He just hinted at pausing and stuff. So, what the Fed does is they tell the market what to price in if you know how to take it. Because if somebody says something like Neil Kashkari came out and said that they were about done pausing, the market rallied. And like a day or two after that, you had somebody else come on talking about 5.5, 6 this. We got to do more. We got to do more. No. He told you, it's going to take time to know these things, but you should be able to feel out who's telling the truth and who's not. All right. They do not want to surprise the market. All right. They don't. They just don't. That's just not Jerome Powell's style. He's done it once or twice, but in a sense to where he didn't trick the market. I revert back to October, I think it was. We got the Fed, we got the interest rate decision release at 2 o'clock. Went to the upside. I think that was when we started 25, I think. And he was like, oh, we got to watch data, this and that, and pretty much tried to take back the paper that was sent out. And it's like, no. The market went down. It traded down on it. But I didn't believe it. And I had a feeling Powell was going to do that because he did not want this market to rally. They say they don't care about the market, but the market is how do I word this? I know the word, I just can't think of it. The market is asset prices. In a nutshell, the market is asset prices. This is the prices of companies' market caps. This dictates how much a company is technically worth. Now whether we can get into a whole rabbit hole of what stuff's really worth, but when you take their buildings, the vehicles, and just everything they own minus their debt, this market going up is making companies worth more. That is inflationary. That's an inflationary event. Okay. So he hinted at pausing. We come through. Powell starts hinting at pausing with the Ben Bernanke. Again, it's really important that you guys try your best. Sometimes they won't have it unless you have like a Bloomberg terminal or something. Then you'll have to wait and watch it back. It's a shame, but it is what it is. I think they should be able to have a place on the Fed site that they should be able to play all of them, because a lot of the stuff is really important. And some people don't have $2,000 a month or $24,000 a year to buy a Bloomberg terminal. All right. Or the company, they don't work for a company that has it. So here we are today. All right. We just went through a whole full year of, we don't want to pause. We just want to get to where we want to get, higher for longer. All right. So if you're telling me we have another Fed meeting in July, and it's now, we're half of the month. We're through half the month. It's the 13th. Tomorrow's going to be the 14th. So you're telling me in like 2.5, 3 weeks is really going to make a difference, when a whole year didn't make a difference for inflation. Things take time, and I think they know that, and that's why they're going to pause. They wanted to get to this 5 mark and hold. I want to say that that's about pre-2019. They're getting back. They're trying to get back to 2019. So they pause. So what's important? Okay, they pause. Well, unfortunately, if you were not long, it might not be a good decision. You can get long, but I don't think the market's going to go up as much as you may think. Not saying you do think that way, okay? The market has literally priced all of this in. Look at that, okay? We were just back here about 2 weeks ago when I started this stream, roughly. Okay, we were... All right, I don't know what's going on here, but we were at 410. We have rallied $26 in literally 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days. 14 days, 2 weeks, literally 2 weeks on the dot. We have the S&Ps alone have went up $26. $26. All right. From 410 to 36. So the move's been priced in. Now, what do we now what could cause the market to go up and what could cause the market to go down? So if the Fed says they are, I am looking for. Let's go back to that. I'm going to be looking for the summary of economic projections. Okay, but there's something more important, and that's going to be the balance sheet, guys. The balance sheet is so important. This is going to dictate whether or not they reinvest the money that falls off of their balance sheet. Do they just let it fall off and not put it back into the markets? Or do they just keep it? You know, it's important because it's liquidity, and liquidity is something that the banks were having trouble with. And I think the banks having the issues that they started to have, you kind of weeded out the more riskier ones, whether, crypto. I mean, you had Silvergate also, pretty much that company is no more now. SVB. Okay. So I guess they're at the point where they think that they can pause. Okay. They think they can pause. I honestly, and then to say that they could hike again in July is just, I think that's just kind of foolish. Okay, I would either just keep them here and go at least 6 months to 10 months. Okay, see where you're at in November, December, October-ish. You know what I mean? Let the summer go on by, get some more data under your belt, and worry about what you're going to do with this. Look at this, guys. It tripled. 2019. Okay? This is the end of 2019. This is September. All right? 2020. March 2020. Boom. 4 million. Literally, they doubled their balance sheet in a year. Let's see. What is that? June? So a year and a half. A year and a half, they went from 4 trillion to 8 trillion. And just about hit 9. It was 8.955. 851. Those are some numbers, okay? So this is what we're going to look for, guys, because this is so important that, like, it also can cause issues. So you want to see if the questions, when it comes out at 2 o'clock, whether they ask. If somebody is asked about it. Okay, listen, we're going to have it live here, and I'm going to make sure that this thing is up as quick as it can be so there's no lag. All right, there may be a little lag tonight. There's a difference between on how I do it. Depends on the lag, I've noticed. So I want to know about the balance sheet. We're going to get the summary economic projections, which is also going to show us, like, and that's the other thing. What if the year-end target, what if they raise it from 5 to 5.5 for the median? Okay, that could also probably send the markets down that, yeah, maybe they're still thinking about hiking. So how can we benefit from this? All right. So I have a playbook. I'm gonna work. I've been working on that. I'm working on it tonight to be able to get it on this computer. Okay. Sending it through emails and doing all that other stuff. So knowing how to play the Fed day. Now everybody says the first move is the wrong move. Well, not always. Not always. Usually you'll get your first move, it'll come back, and then it'll flip and reverse and go the opposite direction. So technically, in the last couple Fed meetings have literally closed right where we opened. There was like very small volatility. And honestly, with the move that the market's already priced in, I do not want to be the bearer of bad news. But man, I hope he says something, because I don't think it's going to be that great, guys. I really don't. I really don't think that there's going to be as much volatility as people think. Now, if they cut and they don't say anything about the balance sheet, let's just say that they cut, and he comes out not necessarily dovish, but not hawkish. Just, we're still going to watch data. We're going to keep the rates up here for a while. We've backstopped the banks. They're okay. The banking system's fine. Blah, 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 blah. We want to watch more data. Okay, well, we know the data's going south. Okay, we know you are going to keep rates here, but until when? All right, what else is there to crack? What about the balance sheet? Because that can cause issues. It will cause issues. You had a liquidity crisis in the banks. That's what caused some of them to pretty much shut down and get taken over. All right, because money left. Money is liquidity. So I really want to know what the Fed, if they even have a plan yet. And I think that's going to give us because you could have Powell come out and say, yeah, we're actually starting on our balance sheet now. We want to run off, I don't know, let's say $25 billion a month, $50 billion a month. Okay. Well, the thing is they were grabbing anything that they could get their hands on. Whatever there was, they were buying it to hold this market up. So we're gonna go more in depth with it. Okay. I showed you guys where to look. I will show you guys in the morning. Just come join us live on YouTube, Ivy League Trading, youtube.com, 7:30 in the morning till 4 p.m. in the afternoon, okay? And I'll have up the summary of projections. I'll show you guys where to look. It's important because, again, there's computers that scan. It scans this shit so fast, and that's when you see as soon as 2 o'clock hits, the data comes out, boom, there's a big you just get movement from the algorithms. Okay, the algorithms are going to be going, I want to say kind of nuts. I hope. Okay, I hope. I think you can get a trade on when it comes out. You got to know where to look, what to look for, and and you got to know when you get the data and you know where it's at on the PDF form or whatever. You need to know how to interpret it. What does that mean? So like I told you, the summary economic projections, on the very first page, there's going to be a box of all 4 or 5, let's say 4 categories. PCE, unemployment, GDP, and interest rates. Okay? And it's on the bottom. You'll see a median, and you'll see their ranges. Okay? So, another thing, you had all these other countries come back and do an interest rate hike when it wasn't expected. But this is not what the Fed wanted to do. They literally said it. So I think they're okay with 5 because of what I said. Because they actually got ahead of themselves getting worried about inflation and didn't know that it was just going to take a year. It was just going to take a little time because you had all this money and all these people doing things and just things ramping back up. People going back to work. So people are back out on the streets and doing things. And it takes time for that demand to die, or slow down, I should say. The data has been a very slow contraction, as in it's like all the data that we get is coming in lighter and lighter and lighter. Each data print that we get, and it's really slow. Does that start to speed up? I think it's going to take time. We've showed it before, but they're not giving the interest rates enough time. You need at least 10, roughly, not all the time though. Don't get me wrong, not all the time, but I think from here on out, we're going to need at least to the end of the year. If not February, March. Okay, to get if we start getting recession worries. It's going to take at least 8 to 14 months from peak interest rates, from when they peak and hold. All right. So come join us 7:30 in the morning to 4 p.m. in the afternoon. We're going to have Powell live. We're going to go through the data. We're going to make our decisions, and we're going to manage our risk. Now, I want to talk about risk tomorrow. For tomorrow, guys, you don't need to put on a regular position size if it's going to be that volatile of an event. Okay? I don't know how volatile it's going to be, but what I can tell you, if it's not going to be volatile, look for the market to make a big, a move down, get your targets, grab some calls or something, and sell it when it gets back to about break even. If it's a not so volatile day, you're going to get volatility, and then you're going to see it come back, right back wherever we open. Okay, and I will show you what I mean when we get into tomorrow. I think in the morning we get a little up, or we get some downside possibly, or a little upside. I don't know if we're going to get through this 437 tomorrow, but if we do, I would look for it to come back and hold 437. If we do break this in the morning, pull back to it and kind of hold it, and then wait for the release to see whether or not we're going to just hold it and go up a little bit more, or if we're just going to stay there. You know, so I have all different types of charts for Fed Day, the playbook. I have the day prior, I have the day of, and I have the day after. Okay, I've seen all kind. The last, I think it was the last one or the time before. It was so they were so just about identical to one another. Okay, I called it last time where it wasn't so volatile. The Fed meeting, if you guys remember, I traded it. There were some trades there, but at the end of the day, you closed pretty much flat. Right where you. What I mean by flat is like if it's 2 o'clock and the market comes down after the release, it goes back up and extends higher and it pulls back. 2:30 comes and you're right still at the release. Let's say it's at 400 on the SPY or something. 2:30 comes around. Jerome Powell comes out, takes questions. We go up to like 406, 405, 408. We come back down, break 400, go to like 398, 396, come back up, and then before you know it, it's 350, and we're literally right back to 2 o'clock and 2:30. Either we're just above it or we're just below it. You know, because watch for that. Okay, I'm calling it now because the market's already priced it in. As long as there's not a surprise, and Jerome Powell has said he does not want to surprise the market. That's the whole point of the Fed coming out and talking. There was a time when the Fed never came out and had these meetings. They would just do it and it would get released. The market had no idea how they felt that day. They could never read their demeanor. You know, are they bullish? Are they hawkish? Okay, we're pausing, but does he come out hawkish like, guys, we're not done. We still got a lot of work to do. I don't think you're going to get that, but you know, there was a time when you didn't get that. You know, imagine trying to trade that. You just get the paperwork. You don't get no questions. You don't see them at all. You know. So it's a little bit better these days to get it. So there's some volatility. I also want to say, guys, you don't have to put on that much risk if we get big volatility. Like if this is it, I'm hoping we get some nice volatility. I hope. Okay. The market's pricing in a pause right now. Okay, the market's pricing in a pause, so if we pause, I think we kind of like stay around about where we are. Maybe we see 440. Okay. I got to get some upside targets tonight. Let's say we pause and he's hawkish and he talks about the balance sheet that's got to get unwound. You know, maybe we see 430 again. I still want to test a 430. The market's had trouble getting over 437. And I'm instinctively thinking we get this test of 430 tomorrow, guys. I really do. I think the market's telling you with this rollover that we had today. I kind of am, and I think other traders are too. They're wanting this pullback to 430. And if we get it, I think you got to be a buyer. Unless something like a surprise or Jerome Powell's demeanor and like he's hawkish and they want to if they want to raise rates, we're going down. If they raise rates, if we get a 25, I think we go down. Okay? So, because that means that's catching the market off sides. The market has to price that in. The market thinks we're not getting a rate hike tomorrow. All right, so now I'm going to go through charts. First, I have to use the restroom real quick, but again, guys, tomorrow, 7:30 a.m. to 4 p.m., iReallyTradingYouTube.com. If we get a nice vol today, you don't have to put on that position size like a normal position size. Dwindle it down. If you buy 5 contracts, buy 3, buy 2, and get that movement, cut it, take the profit. Because I assure you, if there's no surprise, it's just going to revert right back down to where the data comes out. And then 2:30, it's either going to go up, and there's no surprise, and then it's just going to come right back down to wherever the print was at 2:30. Like you'll start to know these things. I think volatility is getting killed. So what? How can we, and what can we expect to move? That's what I want to get into, because there are things that have not priced in a whole lot that are still right where they're at. Okay, what can benefit and what can expect a loss from? Like what's something that can expect downside or something? We're going to go over that right now. Give me 2 seconds. Yeah, it's so frustrating that I got to figure out why the camera was doing it. It wasn't doing it for a while. It wasn't pausing. So we have the VIX, guys. The VIX did come down a little bit today. All right, let's go look at the overall markets real quick. We'll go over the Qs. I mean, we kind of, if you don't know where they're at, get your downside, upside targets ready. Okay. I can worry about the Qs tomorrow morning, but dude, this is a perfect pullback. I want to see a pullback to this 357 level. I would love a pullback to 357 on the Qs. All right, it's not that I would love it. I think it needs it. It has not retested it yet, and it will. It will retest it. So if you guys have any questions, any tickers, please put them in the chat. If you have friends, family that you think would enjoy this information, send it over to them. Bring them on. Okay? Bring them on, and we can we can have a good old time. We're going to go over charts. We're just here to make some money. We're here to make some money. I know everybody loves money, right? Get a nice steak dinner, something. Maybe go take your parents out to dinner and have it paid for. So remember, there's always, for every winning trade, there's always a loser, and for every losing trade, there's always a winner. All right, it's a battle, it's a fight. You're in the ring with the best, so you gotta stay sharp. You gotta control your emotion. Okay, let the chart tell you what to do. All right, don't try and force anything. Like the market's got to go down or the market's got to go up. Don't force it. The market's going up, just ride it. The market's coming down, just ride it. If the market's sideways, sell spreads. I mean, I'm not telling you what to do with your money. That's what I would do. There's always ways to make money in the markets. Okay. Let's go check out TLT, guys. I want to know. So you're not going to get, because the Fed's not cutting rates. Okay. So you're not going to get, I don't think you're going to get a big move unless like the market moves. But I want to watch TLT, TNX, which is 10-year treasury. So TLT has put in this base here. Okay. So we were saying on stream, we get down to 100, we're a buyer until it doesn't work. All right. This was one trade. This is two trades. This is three trades. Could have been four, but now this area is a brick wall, this 102. All right. I want this Fed meeting may send either this higher, or I think this thing could also just sit. All right. This thing could also just sit where it's at. I'm going to be watching TLT tomorrow, but let's just say we go to the long side and he comes out dovish, okay? I'm going to want to play stocks that have been strong. Let's go over some stocks that have been strong. But I just wanted to show you guys TLT, and then you could also play the Treasury, TNX, okay, which is the 10-year, all right, which is pretty much inverse of the TLT because we have an inverted yield curve. All right, technically this should be at the bottom and TLT should be up high. So, I mean, kinda. So, but yes, it should be. The yield curve is inverted. So, you have a bit, look at the 10-year. Look what the 10-year did today. It rose. The 10-year, look at the day the 10-year had today. All right, look at that, guys and girls. That the market, like stocks, this should not be an up day for stocks, even though we went sideways. This was a big day. Is this a clue that says, yeah, they might just give us the 25 and then stop? What's the possibility of that? Sorry, I had to wipe my nose. Yeah, Ray. Like, I don't think I didn't hear anybody talk about this move today. Nobody talked about the 10-year going up like this. All right, I don't know what the 2-year is here, but I brought it up on this chart. Okay, because this stuff is important. Look at this move. Look at this, 4.7. All right, it rejected, but that's a that's a move for yields. All right, so how else can we benefit? What other tools do we have that we can use? We could play the dollar. We can play the dollar. Let's say he comes out dovish. I'm going to tell you right now, I expect this to go down. UUP is the ticker. UUP. Okay? This is the Invesco US dollar index. Okay? So you can play this along with, like, if you don't have a Forex account, all right, you can just play UUP. And it's going to give you, so we drew this bear flag. It's going to give you the same, it's just about the same. So these were my targets, and isn't it funny how my targets line up? Like, this was the poll. This was on this long one here is like, whether it's longer term or something happening, because that's pretty much the measurement that like for the extravagant event or something, that's the measurement I got. So the basic other measurements were here. Now, isn't that funny how that lines right up with the 50-day? And then on the upside measurement, it lines pretty much damn well to the 200-day moving average. If you don't know, this turquoise is 200-day, blue is 100, red is the 50-day. Now, if I see somebody's charts, I kind of already have an idea what they are. I don't need to know the colors. Like, well, I kind of like, because I know where they're at, and I know how I could tell by the movement. Like, this is your longer term, median, and then look at this. Look how much that's moved. Stuff like that. And just knowing already where they are. So this is Dixie, DXY, which is the dollar. The dollar is putting in what looks like a bull flag, but it looks like a bull trap. Sorry, I got to get a drink of water. Or a bear trap, or a bull trap that's thinking the bears are right. The bears are thinking it's a bull trap, but what happens? What if Powell comes out tomorrow and gives us the 25 unexpectedly? Boom. Seriously, this could be the breakout or the breakdown. Get faked out, and Powell's like, and it's not just Powell, but the group of them all. They decide to go another 25 basis points. Boom. What are we doing? We're on UUP. All right. And we can also, oh, come on. We can also use these tools like VIX, like volatility index. Okay. Like UUP, the dollar, TLT or TNX, the 10-year treasury. We can put hedges on. Okay? We can put hedges on. That's also a thing. We could be long one and short the other, or long both and cut the one that doesn't work, depending on the data we get. So if we know TLT goes down when you have interest rate hikes, and the dollar goes up if you have interest rate hikes, you could just be long the dollar, short TLT. So if you don't get an interest rate hike, and he's dovish or something, the dollar doesn't mean it's going to, may go up. Okay? And then you cut the TLT because that's obviously going to go up. It's not going to go down because yields are coming down. Yields are coming down, so the price of it's going to go up. So I just want to bring these things to you guys. UUP, again, that's UUP, TLT, TNX. Okay, I'll go over it all in the morning. Okay, but I'm really curious about. So I have a paper I want to show that I want to bring on stream because I've been working on a lot of other things too, and it shows like bear markets from bonds and the equity markets. Like the peaks and troughs and the timeline that they go through. If you guys haven't seen it yet, so if we come in and like the SPY, you notice how the SPY is going up and bonds are still here. Usually it takes about 2.5 years where bonds will start putting in their base and then start going to the upside. Okay. I will show you what I mean by posting that. I'll have it all ready. So let's go over some stocks. We had IWM today, kind of hang in there. Put in a big tail off of this level. Okay, we had drawn this level out and said, hey, watch for the range, whether it's from here, or if it's these two levels. Okay, worst case scenario, it's this bottom end right here. So the market's priced in a lot. Now I want to look what was strong today. Okay, you had a lot of mid-cap stocks. Nvidia was strong. All right, Tesla, TM, Toyota. That had news though. Toyota had news. I wouldn't really expect. So you want to look for big cap tech. Okay, you want to look for big cap tech. What is this? Estee Lauder. So I think. See, Brown. I thought Budweiser had. Okay, there it is. Okay, so it was still flat. I want to look at consumer cyclicals. Okay, I want to look at semiconductors. I want to look at technology. Okay, consumer electronics. What do we have in here? Sonos. We have. And look. The banks caught a nice bid today, guys. Remember yesterday how they were red? They had a pullback day, and now you're starting to see them green, and then you might start seeing these start turning green or red, because it's kind of how things work. UNH, I want to go over UNH. They had downside after the bell. Look at cat and deer, guys. I told you guys, transportation. Okay, transportation. Look at cat and deer. Look at cat specifically. 3%. It's crazy. Look at Ford, guys. Guys, that's 2.5%. That's a nice day. Like, especially on options. Okay? Rivian was up 8%. I'm surprised Rivian's even in the freaking S&P 500. How is Rivian in the S&P 500? Who do you guys know who owns Rivian? Like, does somebody else own Rivian, or Rivian's, I guess, its own company? Because the thing is you're supposed to have, I think, 2 consecutive quarters of profit to be in the S&P 500. That's the first criteria. Like Tesla. Tesla had to have 2 positive quarters of earnings before they were able to get the invite to join the S&P 500. So that's kind of weird. I just don't see how they've even been around long enough to, like, be cash flow positive. How is that? That's so weird. That's so weird. I guess they needed somebody. I don't know. That's so weird to me. That's so weird to me. No, because I'm in the Fool. I'm not in the S&P 500. That's right. I'm sorry. I'm on the Fool right now. This is not the S&P 500. This is, I guess, like, pretty much the most, not all stocks, but the majority of the main cap stocks. Okay, so I take that back. Rivian is not in the S&P. So, all right, let's go over some charts and stuff, guys. Go ahead. If you want to throw some stocks in the tickers, what you guys are looking at. But I would suggest going through here and then going to your charts and seeing what's been strong, like Square or Block, whatever, I still call it Square. You have like Okta, Coinbase, like, not saying Coinbase has been green, but Net. I owned Net a while ago. It was up 5.9% today. I think CrowdStrike had some volume today. So let's go through some tickers. All right, what are we gonna want to be long and what are we gonna be short? Let's go through. I'm gonna do it. If you guys have any tickers, go ahead, post them up. Like, share, and subscribe. Send it to your friends. Whatever you guys want to do. Thank you guys so much for joining us. Like I said, I'm just gonna go through some charts. If you guys are wanting to hang out, you're more than welcome to ask questions, engage, try and get some people on here. That would be great. I'm gonna start trying to give some money away. But Collins and there's 2 other people that that aren't even gonna be in the running because I'm gonna give them some money because they are the real MVPs. They've been here from the beginning of this. So let's do this, guys. So let's go to CRWD crowd, and then we'll do net. Um. Oh, okay. Let's see here. I have not owned CrowdStrike yet, and I almost bought it, but I didn't. I did own net, which is about the same as pretty much it's like software, like cybersecurity. Um, it's a nice bull flag here, breaking out. Let me delete. I've actually went through and started deleting some of my lines because I'm like, just you don't need to keep them up there because you're not going to get that move in a day. It's just I hate when I have like lines up. It's like I feel like I don't want to miss them, or like I don't want to like forget about those levels that I had, because they're there for a reason. So where do we top out at? We topped out up at 160 on the money. Okay, what's 160? I want to see what this weekly chart looks like. So tomorrow morning, I want to show you guys what I do, like what my checklist is for a stock. All right, it's actually a lot. You're gonna be surprised. You're gonna be like, "Holy shit, you do this for every trade?" Not every trade, but pretty much every. When I go about a trade, I want to dot my I's and cross my T's because it's important. You could be missing something. So if I go through and I get my ATR, I get my 52-week range, I get my catalyst, and then I come up with, is the catalyst good? Is it bad? Where's my support? Where's my resistance? Where's my daily moving averages? Things like that. And there's some more to it. Like, where's the VIX? Is the VIX up at 20 something, 30, 40? Or is it down at like 13, 12, 14, 18? Like, where's the VIX at? That's going to hinder your trade. So it's a lot. But that's professional training, guys. That's a professional training. Professional traders do that. Okay? And I'm going to, because they train like athletes, guys, to get good at this. They train like athletes, and you have to too. All right? If you want to become the best in the world at this. Yes, some of them may have capital from other people, but that doesn't mean you can't take your own account and grow it and do nice things for yourself. So again, we like to stay positive here. We're here to live. It's a good time to be alive right now with everything that's going on. It really is. So we have CrowdStrike putting in this like bull flag, guys. This is a pretty nice setup here. Look at this. That's pretty nice, isn't it? Especially it's putting it in on a weekly chart at that. So I would watch out for that. It looks like it's having a little bit of trouble at the 200 day. Is that what that is? Yeah. I mean, I know it's the turquoise, but I just want to see where it's at. I don't need to spend too much time on this shit. I just want to go through and chart it out. So yeah, it actually, the weekly chart has not broken through the 200. So once you zoom in, you find, hey, the stock does not want to be above the 200-week moving average. All right, let me go to the daily. I'm going to start coming up with some trades, like I said, guys. If you guys have any tickers you want to go over, throw them in the chat. Throw them in the chat. You know what? I could always put some music on, too, because, like, I don't really have any followers or subscribers. It's not like I'm getting paid and there's going to be copyright issues. Let's see here. Where have we found support? Of course it's there. How'd I know? There's a small gap there. That's why. There's a small gap there on crowd. I'm gonna want to watch this, guys, because I think crowd's setting up like. It's setting up pretty nicely, especially if it can break out. And I think it's doing it now. Like if I take this, like that was the weekly chart, and it messes up. Remove. So I was telling you guys about transports. I would still keep your eye on transportation stocks. Like Ford's had a great day. I'm telling you, like, because I also myself do not want to see Ford, even though it's up here. It's like I don't want to FOMO, but I also don't want to like wake up 3 weeks from now, for a month from now, and Ford's like, I look at the chart and I'm like, you know what I mean? So I'm gonna look up gold. Hey, that's another thing you guys can play is gold. Okay, GDX, GLD. So this is crowd. I want to go look at. I want to look at what's been like strong, but I know crowd had a decent day today, or like these type of stocks did. I'm gonna pull up BABA too in a minute. See, I want to catch a day like this where it's like a big continuation day. You just have to like kind of know what to expect and when to expect them. The easiest thing you can do though is volume. Volume is the biggest tell on like what that stock's going to do. If you're going to have like some momentum or whatever, the volatility. Like look at that. Look at this. This was the day after earnings and it took it right back. All right, so let's go. I'm not CrowdStrike's okay, but I thought because earlier I said that there was a bunch of movement or had a bunch of volume on it. Let's see. So we can obviously do like Nvidia and stuff like that. I kind of want to look at Meta, but let's go to Nvidia. I love trading Nvidia. I don't really need to go to the weekly chart or daily chart because it's above all moving averages. So I think did Nvidia finally close at $1 trillion today for the first time? I think. Once it closed up here, because it tried to do it back here and then it sold off and it like didn't get to the $1 trillion level yet. See, this thing's already overextended. I'm gonna find something good. I want to find something good, like a really nice setup. And you gotta search for them, whether it's like news or a sector. So it looks like Ford's got. Didn't I? This was a 2 for a reason, guys. Look at this. So when I came on here and started this live stream, you could have bought calls, whether it's a month out, 2 months out, and you're probably up 200%, if not more, on these calls. Unbelievable. This was our target, guys. This was our target. We called this out. We called it out. I mean, I just over here handing out gifts on a silver platter. Look at that, guys. Right to the target, and you got a little tail. You've had tails on these and stuff, too. But that was a breakout pennant day that I was trying to watch. And so I expect a pullback from Ford. Maybe we get it tomorrow. That's crazy, man. 12, 13, or 11. But we'll call it 12. That's insane. That's pretty crazy. I mean, it's not crazy, but, I kind of am like really wish that somebody could have, partaken in this. Because we called it out down here. We called it out on the breakout. This is all that was there, was this. And we got this, pull back, and I'm like, now's the time. Now is the time. If you're going to get long forward, get long forward. So, look at Tesla. They said Tesla had to reverse and go back because it was too green. It was just too green. It had to come back. It had 11 days straight green. Wrong. Don't fight the trend. There's a lot going on there. There's a catalyst. All right. There's a catalyst. Microsoft, I think, is one of the only. It's not the only because you have like Oracle and stuff. As far as big cap tech, it's sitting up at all-time highs. I want to come up with some stocks, guys, like Shopify. I'm trying to think. Let me go to which one? Man, Shop's making its move too. That reverse head and shoulder. It took forever for that thing to happen, because everybody's seen this thing. See this reverse head and shoulder here? And what makes this like a nice reverse head and shoulder is because you had the retest. Where you break out of it, pull back to test the neckline, and then it's on to the races. And you had a day like that on earnings. Looks like it's trying to break out again. Should lift that 50-day moving average up. And man, this thing, I feel like this thing could have some wings. Let's see. No, there's no gap there, but still, I mean, I'd be looking for the top of that range there. That's still a couple dollars, 63 to 7. Yeah, 63 to 73, 74. So yeah, that's how you guys want to play it. You see this range here, so how it's just consolidated and then it drops. So you want to see, because this is an area of resistance at 74.11, roughly, because the chart's small. Yeah, 74, call it. Let's look at BABA. If you, like I say, if you guys have anything you guys want to go over, just throw them up in the chat. BABA, look, rejected the 200-day, rejected the 50-day. They were both right there. So that's another lesson for another day. But when you have the SPY went through it a while ago. You have like two major moving averages, or two major. Let's see. Two different indicators that are like right there, like the same indicators. So like you see, like it's the 50 and the 200, and they're both right there. This thing may have trouble getting above it on BABA, and I want to know if BABA holds the level that it got up to today. All right, it needs to pull back. It couldn't break the level, so if it pulls back down the resistance, which is going to be right around here. See how it couldn't break up through it to get up here? Couldn't break this level. See this level? It right here to the left. What is there? There's a gap. Well, or there was a gap. So that's just, it didn't hold it because it didn't close like right up above it. But again, like my lines could be off just a little bit. So you have the 50-day and the 200-day just sitting right there. So it may take it a couple tries, because that's two indicators it's trying to get through in one shot. All right. I need to look, like I say, I have to do some more research. I have to look through and see like what's really strong, like what's what's a good catalyst for something. We do have sports coming up in the next couple months or so, which should probably start to get them up. Hold on, let me let her out real quick. And when you know it, she pretty much slept all day. But I'm gonna be tired enough to where I will be out. I can already feel it. So what do I want? What do I want to see from BABA? So I want to see BABA. I want to see BABA hold, like, because it couldn't hold that level up there that it was at this morning. So what's the next best thing? You have like a 1, 2, 3, 4, 5. You have like a quadruple top resistance up here. All right. You want to see if that holds, if it pulls back and holds it, or if it just breaks. I didn't know if she was. So I think JD.com was up today. Let's go to the world real quick. Yeah, I think JD was up, but it also pulled back. It's up because it had a pullback, I think. And there'll be news in the markets, so you can always wait for news to help you out on, like, knowing where to be. Let's go to weekly. There's got to be I think there's a weekly one on here. Groups. That way we know like what's been strong, like I said, consumer cyclical. Consumer cyclical. Let's go to Google. So guys, I want to watch and see like what BABA does at this 86 level. All right? Or is BABA like, is something going to happen and BABA just floats back down to these lows? We'll have to wait and see. But it's going to have to do something. It's going to, whether it sits here and just pulls back a little bit and then starts going, but it's got to figure out what it wants to do. Because it's just gotten blasted. Look at this, guys. Look at that. Nobody wanted it. Nobody wants anything to do with China. They're not trustworthy. They changed the laws around. You close your eyes one night, you wake up the next day, and the whole world's been flipped around, and you're like, what the hell? So the institutional money is done. This is the institutions being done. Giving them an opportunity, and it's not Jack Ma's fault. Jack Ma's the creator and owner of Baba. It's not his fault, but just what happens, man, when you have a party leader like that. It just changes the rules on you. I want to look at Google. So Meta's still cranking up to all-time highs. It's in the gap. It is putting a little bit of a base in, but I know they're out there. I just gotta find them, and I'll be looking more tomorrow morning if I don't come up with any tonight. But I want to find a really nice setup. So we can talk about risk management too, guys. Like tomorrow, guys, don't force anything, because if we do have a really volatile day, you may have to deal with drawdowns. You need to know how to make this, you need to know that you can make the right decision and at the right time. Okay. And what do I mean by that? I mean by Powell or somebody saying something and the market goes down, and then only to reverse. And people bought the dip because what he actually said was the markets cared about and the markets went up. So things like that. Knowing if you're wrong, it's we're going to be there to help guide you through it. I'm going to tell you my thoughts and everything. Hi, baby. Daddy gave you some yogurt. I know you're hungry. You're okay. Oh, shit. If the camera was working, I'd show her to y'all. I think I'm going to just pretty much wrap the stream up, unless you guys have any questions or any tickers you want to go over. If you don't, I may just wrap it up. Tomorrow's going to be a big day. So like I said, I want you guys to watch for the tone, his demeanor. Is he say, yeah, we're going to pause, but we want to, we're still data dependent, do we get the right interest rate hike? What does that mean? Where's your downside targets? Where's your upside targets? Okay. What sectors does that affect? Because interest rates affect different sectors differently. Okay. Whether that's, regionals. Okay. I'm going to be watching regionals. Like Pac W, I think, if that's still a company, Pac West. Yeah, Pac W is actually up at the resistance. There's all kinds of them, PNC, M&T, but you want to get the ones that are kind of risky, that actually move and have had a catalyst to be down as much as they are. PNC is actually a pretty big bank. It's probably one of the biggest regional banks. I'd have to take a guess and say, other than BNY Mellon maybe, which is New York Bank, but it's got a lot of institutional holdings in it, and they don't really do a lot of risky things like a Wells Fargo or an SVB or something that they would do. So again, tonight I'm going to go through I don't care how tired I am, I'm going to go through where I should be. Where should I be for what catalyst, for what direction, okay? Baby, Daddy's gonna feed you. Come on, you still have some food left, and Daddy gave you yogurt and stuff. She slept all day. Oh, I want to see biotechs. And listen, you can always play other countries. Okay, you can always play other countries. Okay, EEM, that's emerging markets. But oh, look at that, and it's trying to break out now, and TLT's not breaking out. Look at the pennant I have on here, gang. Look at that. What do we set? What do we do though? We wait for the pullback. We wait for the pullback. Look at that. That's a beauty. That's a beaut. Hold on. Yeah, I like that a lot. I don't know why it's so changed up. If it's because I haven't been on here and I haven't visited it in a while. I would have technically forgot about that if I didn't type that in. You know how many times I've done that? Where I've came to a stock randomly, whether it's a piece of news or something, and I had the whole freaking thing charted out, but I forgot about it because I didn't write it down or something, So, yeah, that's not too shabby there. I'm going to keep it there. So, I want to see if EEM can get a pullback. Oh, shit. Yeah, I'm getting tired. I can tell instinctively. It's got some upside to it. Look how small these candles are, though. Like, you see how, like, you can't even see that little rinky-dinky thing. And then look at this one. What are you doing, Bean? Like, right here. Like, you see how big these candles are compared to this back here? It's crazy. So, again, we got the dollar. We have yields, like bonds. We can play yields. We can play the dollar. We can play other countries. We have inverse ETFs. There's all kinds of things we can use, to help, to help us make money in this market. There's not just one specific way. I think Dave and Buster's had something go on today. So what, like GME. GME was really. I watched it for a little bit, and then I kind of just took my eyes off it. I was like kind of watching. Not kind of. I had it up. I was watching AI, and I couldn't believe the move it was making. And it's. You're not going to catch them all, but you can put yourself on the right side of probability to give yourself a chance to catch, to catch either upside or downside. Like, a lot of times I'll use like pre-market volume. Pre-market volume is important, man. Yeah, I know, bro. It's usually like she just comes in early in the morning to eat. So like last night she came in at like 3:30, and I'm tired now, so I'm gonna be going to bed soon. And she, like, last night I was ready to get up. I was thinking it was like 5:30 or something. I look at my phone, it was 3 o'clock. So she just wants to be fed. That's all. She just comes in and whatnot. I don't know why. I just like always shut my door when I'm sleeping. So like she opens the door and this whole thing, and she'll lay. It's so funny because she'll lay with me and like she'll put me to sleep. She'll lay with me and put me to sleep. It's just funny. It's funny. She'll sit and she'll get up literally every time, like 15 minutes. She'll sit there and purr, and like last night I thought she was gonna fall asleep with me, and she's nope. I slept all day, Dad. I'm up all night. She goes sits in the window and stuff like that. So her mom hasn't been here in a couple of days. Like my girl's parents have. Her mom had surgery and stuff, so she's been there, and that's also like kind of screwed up her sleep and whatnot. So it's kind of messed up her schedule. And then I'm busy doing this during the day, and I try to play with her, keep her up. But she slept all afternoon again. So, but yes, I will be ready to go. Yeah, mine does too, though, man. Yep. Yeah. Mine doesn't go too crazy because she'll go in the other room and like she'll go sit in the window or something, and she's really good. It's just like when she thinks it's early in the morning and wants to eat, thinks the birds are gonna start chirping and whatnot. I think she's laying down now. This little punk. What are you doing? You gonna wake up, Mo? Come here. Yeah. So, oh shit. What you got any trade ideas, dude? Like anything you're looking at in particular? Any news or anything? I'm just trying to take notice on here. Like I know TSM was pretty strong yesterday or today. My days and nights might be getting together. I could probably put on like a different. I do know that there was this break and retest I was looking at, and it struggled to hold that level up there. Like I had this kind of planned out, and I never traded it. I never traded this, unfortunately. Look at that bull flag. I think I showed it on the live stream one night. Look, like that's about as good as you can get, you know. Like look at this. There's prior range, break down. We come back up. We shoot right up to it, pull back and test it. That's a nice play there. So again, I guess semiconductors. We can look at on. I haven't played this stock, but I thought it, or no, it was on maybe. Dude, and SMCI has been going nuts, man. I own the stock. I used to own it at what was it? What was the damn thing? No, but I do know SMCI. SMSI or something. Hold on. SMCI. Yeah, this one right here. Dude, this thing is $270. Bro, I used to own this stock at $20. Swear to God, I owned this thing at $20. I don't know. I think I had maybe, I don't know. It wasn't anything crazy. It was like 10, 20, 30 shares. No, it was like, I want to say it was probably like 20. It was like 18, 20 shares of this at $20. And this son of a bitch is almost at $300 right now. And I got rid of it. I don't know why. I don't know why I got rid of it. You know what I mean? That's crazy, bro. Oh, Cat. Yeah, Cat was up pretty big, dude. Like I said with transports. So the thing is, like, yeah, like look at this. So if you're gonna play Cat, the only thing that sucks is like their options on these, the spread on them is so wide and they're so like illiquid. Like if you just bring up the options chain on it, like don't get me wrong, if you catch some movement, you can make some money, but the thing is about the spread is if you like don't have an order like put out there, like let's say if you buy a call or something at like I'm just gonna say $200, and the spread is like 185 to like 10 to 200, which is $15 spread, or like 190 to 200. Then you got to worry about, you're buying on the ask if you don't market order in, but the selling part, like if you don't have your order set out there at a price target to sell and know how much those options are going to be, and you might get filled on the bid. So you're already lost. If it's a $10 spread, you're already looking at a $10 loss per or a $10 spread. You're looking at like $8 to $10 or $5 to $10. So if it's like if you get filled in the middle, let's say the spread's $10 and you get filled at $5. Okay, so there's $5 there plus your commissions, and then another $5. So if you get like a $10 spread, it's like $20 just on that. And I'm talking one contract. Like that stuff adds up when you're buying 10, 15, 20 contracts. 50. Like you got it. Like with CAD, it's pretty crazy. Yeah, I feel, bro. I mean, and those are liquid and those are good. Yeah, they played cat. Yeah, it was up today and you could have made some money on it. But again, like I said, the spreads on them, like, and that'll change. It's not that it'll change, but if we can continue to get people to play cat, those spreads will start to widen up because there'll be more liquidity. There's just like no liquidity. Like, I don't know if you ended up looking at the options at all on them today. Like, if you did, like, did you notice the spread on them and like the volume and open interest, like how small it is? But yeah, it's a good stock to play. I'm kind of, like I say, they had a really good day today. The regionals had a good day today. What else? There was all kinds of stuff that actually happened today. It's pretty crazy. But so there's the S&P, BIIB. This was the stock I was wanting to look at yesterday, but they were down. Oh, CRM. Listen, so like you'll notice like no, yeah, it's not. Yeah, like it's really not, bro, because even if you catch it on the bid and like you just like you put an order out there and you keep like bringing your order down, like, you know, if it's at $2, like the bid's at $2 and you put out for $2 and you just have like, an order that is not like a filler kill or whatever. It's like you just put it out for the day, and then it goes down from 200 to like 198, 190, and you're just chasing the bid down trying to get filled. You may never get filled, one, or if you do get filled, then you still got to worry about getting out, you know. So, but I have traded cat. It's been a while since I've traded cat. I actually traded deer. Actually, it was John Deere, and those spreads are the same. It's just weird. Like those two are just like that for some reason. You can make money on it. It's just you're just the spread and then the commissions. It's sometimes it's a pain in the ass, but where there's opportunity, there's opportunity, because this upside and stuff will handle itself. Well, this isn't cat. I had it up, but ENPH. I'm just trying to find. Okay, so ENPH just hit resistance. Okay, it hit resistance. Trying to maybe I'll just have to spend some time. I plan on getting up early in the morning. So damn, it's already 11 o'clock. I'm gonna call it a night, my guy. So I appreciate everybody for coming on. And like Meta still going to the upside. Like I said, when I meant that thing is a deal, it's still a deal. It has ran up, but it's all those people that sold buying back, regretting that they even sold it in the first place and just didn't pick up more and average down. That was the best opportunity to average down. But again, you don't know these things. Like, nobody knows the future. Nobody has a clue. You can guess it all you want, and like you can kind of like you can have an idea, but there's just events and things that happen that you may not be able to price into it. So, all right, man. You guys have a great night. Thank you so much for joining us. Like, share, and subscribe. Monday through Friday, 7:30 a.m. to 4 p.m. We're live. Let's go, guys. Tomorrow's the day. Tomorrow's the day. So get your sleep. I'll see you all in the morning. Thanks again for joining me. Have a great night. Stay positive. Wake up tomorrow. Own it. Just wake up like a boss. Just psychologically, you're gonna just make the most of the day, and everything's gonna go your way. It's hard to get out like what I'm feeling to be able to like pass on to you. You know what I mean? So get ready, guys. Get ready. It's coming. I'm gonna hope that it's gonna be volatile. I just don't know at what, like, how volatile, the level of volatility. I don't know if it's gonna be that volatile tomorrow, the Fed meeting, unless we get a surprise. Guys, I appreciate y'all being here. Like, share, subscribe. I will see you guys tomorrow morning, 7:30 a.m. right here, I Believe Trading.